Welcome to another live stream, Legends. Well, guys, Bitcoin absolutely getting shit kicked once again, so I want to go over the good, the bad, and the ugly. Trigger warning, I will likely offend some people in this stream. Some truths I'm about to speak of are not about anybody in particular, just what I'm seeing across all social media platforms, basically. So with that, let's hop right into it. I'm actually going to switch things up a little bit and start on the lower time frames just because something caught my attention while we've been sitting here. But basically, there was potential for some sort of a bounce. I just want to show this that on the microstructure here, or on the micro time frames more so on the 5 minute, we had this low, we had this lower low here. That confirmed this, the highest point between the two, as our lower high on well, just basically the high of that trend between the low and the lower low. Unfortunately, what happened since that is we have already potentially lost that uptrend, because this is going to be microstructure, but you guys know I freaking love microstructure, and that basically is how I call those Stuber fib setups early and all that sort of good stuff. So right now, basically after taking out that high, we had this little high, and then we set another slightly higher high. Again, very micro analyzing, but that would have confirmed this as our higher low on the trend. Notice we actually broke it here, even though it was just a wick. That was a little bit of a warning sign. So I know I always say this, you guys, that basically when it comes to Stubers, you start, once you see them, you just can't unsee them, and you basically see them in all shapes and sizes. So right here, for example, this is where we lost that little bit of structure, very micro structure. But then let's just look, right? Let's pull a fib from our high down to our low at the time, and look where we got rejected. You can't make this shit up. It just, you start to see it all over the place. You know, once you start to see it, I used to joke about this all the time. I see Stuber fibs in, you know, trees, when there's trees taller than trees next to them, you know, when I'm looking at building heights, when I'm looking at friends and family, you see these fibs everywhere. You start to notice these, but just here's a perfect example. Obviously it's already played out, right? Because, and that's the thing, they're not always worth playing as far as a scalp setup. But as far as the scalp setup here, we got into my Stuber fib pocket. We tested the 786. We even tested the 886, and we have since hit both targets, right? We hit the 0.5 fib. We hit the 214. Yeah, it's a very small range, but it did still play out, right? So at this point, one thing that we could look for a potential bounce now is, and even if we end up trending higher, basically if we trend higher, I would continue pulling a fib with the price and just extending my range, basically. But as it stands right now, since we did have this little break back here, it is possible that we find some sort of a bounce down in our support fibs with a range pull like this. I'm personally not that interested in playing the long side myself, because this trend has been so disgusting and easy to trade to the downside that I just have no interest in switching that up right now. Because let's hop over to the 4-hour chart, you guys. I'm going to zoom out a little bit. I'm actually going to take off the Trendmaster as well. Let's just look at basic market structure here. Ever since basically I was warning above 125K that, you know, we were trading in some sort of a swing fail type of a setup. Why isn't that loading? Here we go. Basically there we got into my swing fail territory. I was warning that, hey, we might see a reversal here rather than FOMOing into a breakout. I started building short positions. And since that has been, well, when was this? About 6 weeks ago or whatever. Ever since that, we have been just setting lower lows and lower highs. Every one of these little yellow lines is actually a lower low. Everything in between is just noise. So a lot of people are probably wondering, well, Stu, you keep saying that, you know, we haven't broke a lower high in 6 weeks. That's not true. No, it is true, as long as you understand and you can zoom out and look at structure for what it is, right? Because all of this nonsense, I'm going to call it nonsense. Yeah, there was opportunities in there. There was smaller ranges inside the bigger range. But as far as the macro goes, you know, we just continued setting lower lows, right? Since this was our low. This is the next time we broke it. That's our lower low. That's our lower low. That's a lower low, lower low, lower low, lower low, lower low, lower low. And obviously everything between those lower lows, the highest points between them all, would be lower high. After we set this lower low here, confirmed as a lower high. Another slightly lower low, confirmed as a lower high. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and basically the trend goes on, right? I know that it's hard to follow that when you're not used to looking at microstructure like that. That's totally fine. But something that I want to mention, and something that should say a lot about the strength of the bears, or at least the weakness of the bulls at this point, is this little green line here. This was the first time in 6 full weeks that we got any kind of a micro lower high structure break on the 4-hour chart. That was literally the first time. And unfortunately, what happened there is we very quickly reversed that, and the bears pushed us to a new lower low, and then we've since set another lower low. So that really, we didn't get anything out of that. The bulls were nowhere to be found when we got any sort of bullish signs in the market. And other than that, there has literally been fucking nothing. Anybody who's telling you that, you know, we're going to all-time highs in Q4, anything like that, there's literally fucking nothing in the chart suggesting that. That is nothing but a hope and a dream and a prayer at this point. Don't get me wrong, yeah, there's a bunch of bullish fundamentals, but understand that the top of a bull market is always the most bullish that crypto has ever been. The start of the last bear market, that's how it was. The start of the bear market before that, that's how it was. The very top is the most bullish that it will ever be. And that's basically where we were at when we were testing our all-time highs, right? We saw retail start coming in aggressively with longs trying to play that breakout, and we've been in a downtrend ever since. Unfortunately, I wish I had better news, but I don't. And yesterday in my public stream, I actually called out this resistance here where I'm in this short from 92,552. Basically what I was looking at, and the structure that I pointed out on yesterday's stream was exactly that, right? Basic lower lows and lower highs. So we had this low, we set a lower low. I was using this level as my confirmed lower high, pull a fib from there. Oh, what do you know? We get rejected right at the 886, set a new lower low. At this point, now my red line right at about 93.2K is my confirmed lower high on the 4-hour trend. This is not bias. This is not emotional. This is not a gut feeling. This is fact. This is fact based on, this is just in the charts. That's just what the market structure has. There's no other way around it. So at this point, even if we do see some sort of a bounce, I will be looking to reload some shorts as we get back towards resistance. So basically, I'd be looking at a fib something like this right now, pulled from my confirmed lower high down to my new lower low. If we end up trending lower before any green candles, let's just say this turns into a red candle and absolutely nukes, then I'll just continue chasing the price, and that will be my fib basically. But at this point, if we get some sort of a bounce here, that'll basically be my new lower low, and that'll be my fib. So if we end up getting back up to these resistance levels, I'll be looking to ladder into some shorts again. Eventually this trend is going to break, but guys, this trend has been so healthy. Like I said, not bullish, but healthy because of basic market structure. And this is literally day one technical analysis. It's just that it takes one day. On day one, you should be learning this type of structure. However, it obviously takes a while to get good and, you know, confident in it and, you know, get a strong understanding of it, right? But that's the thing, is this is the foundation to, in my opinion, the most important thing that you could ever look at in trading. Basic market structure of lower lows in a downtrend and higher highs in an uptrend are literally the most important part of trading. Yes, indicators are great and everything, but so many people like to overcomplicate things and start just grasping at ideas from indicators without the price structure matching up with it. And guys, for me, it's always market structure first, indicators second. I do use indicators. Actually, the one thing that I do use on its own quite often is the MDX Trendmaster. But it's a very specific strategy I use, right? I want to see which way the signals are trending, basically. But other than that, you know, when looking for divergences, when looking for anything like that, just understand that the basic market structure goes so much further than any of those. And those are great confluences to have. But a lot of people put those before the price action. And that's a huge mistake that most traders make all the time. I want to zoom out to the weekly chart here. First of all, starting with the logarithmic chart, because I know a lot of people were saying that, that big liquidation event that we had about a month ago or 5 weeks ago, whatever, a lot of people were comparing it to the COVID crash and saying it was a liquidation event. That is simply not true. The altcoin market, yeah, sure. I honestly feel better about the altcoin market than I do about Bitcoin right now. Obviously, if Bitcoin crashes, altcoins are also going to crash with it most of the time. However, whenever Bitcoin actually gets its footing, gets a little bit of grounding, and gets any sort of signs of life, that's when altcoins are getting that big FOMO push right now. And also that lines up with the theory that if Bitcoin has topped for the cycle, that's a big if. I have no idea if it's topped or not. I think it has, but I don't know for sure. But if it has, it's quite typical for altcoins to go for their final push and end the bull market with that, basically. But yes, altcoins did have their capitulation, their liquidation event. But to compare Bitcoin to the COVID crash, very different. And this liquidation band, this MDX liquidation band indicator on the weekly chart shows that we were nowhere close to hitting our macro liquidation levels. COVID tested it perfectly. The bottom of our bear market tested it perfectly. We can go back previous market cycles. Bear markets tested it, right? Those are liquidation events, hence the name liquidation band indicator, right? A liquidation event to retest it. People were calling for that, and we were $60,000 away from that level, you guys. So it is nothing like that at all. That being said, I think it's possible we see some sort of a bounce. Now, I do not actually consider this a valid Stuber fib pull myself. Yeah, it's a 786, 886 fib pocket. Yes, it's a potential support zone. But how I feel with Stuber fibs is basically, I'm actually going to go to the regular weekly chart here just so that it scales differently. But basically, when I look at Stuber fibs, like when I'm looking at the 5-minute, for example, as the chart structure trends to the upside, I would be basically looking for, basically the confirmed higher low is going to be where I'm pulling a bullish Stuber fib from. So a good example of that would be, although it's very micro, notice that this was our high and we did actually go a little bit higher here. So this was our confirmed higher low on the trend. So I would have had a fib, something like this. And the fact that we dropped it, first of all, it actually played out once, right? We basically got back to the 0.5 fib there. But overall, it failed. We dropped to the downside. Now, typically speaking, when I'm looking at a 5-minute chart, something I'm more actively trading, for example, if I lose that micro trend, that's where I start to look for where was the beginning of the swing. Well, on a macro chart like this, the beginning of this swing is literally the bottom of the market cycle. So in that case, this would be a valid actual Stuber fib, and it would line up down closer to 40,000 US dollars. And if I bring up the liquidation indicator, notice where that level happens to be right now. Now, I don't think we need to go straight there. I think it's very likely that somewhere in this region we end up finding some sort of a short-term bounce, but I just don't know how likely it is that it actually sticks and sends us to new highs. I think if anything, we get some sort of a bounce, retest our old support as new resistance, and end up getting wrecked. Or just, some sort of a bounce, trade sideways a little bit, and then this turns into a big bear flag, right? Very similar to what happened in our last market cycle, because this structure, the sentiment in the market, absolutely everything feels so familiar to me as just like it did last cycle, where we lost that upward trending trend line, basically traded sideways for about a month. Everyone said we were about to recover and go to new all-time highs, right? When we were trading at these levels, basically this whole level here, or that whole range, we were basically hearing that Bitcoin's going to 100,000. In my opinion, this cycle, everybody's saying, oh, Bitcoin's going to 250,000 or 400,000, whatever the fucking ridiculous targets are out there. This cycle's 250K target is last cycle's 100K target, if you ask me. I see absolutely no reason why we need to go to all-time highs, but I am willing to accept it if it happens. So looking at the log chart, yeah, a retest of that old support flipping into resistance. it's not out of the question. I think it's not all that likely, but it's absolutely possible. Like, let's just say we ended up bouncing now. Well, hey, we lost that uptrend. Let's look for a bearish Stuber the way I would on a lower time frame. What's to say that we can't do something like this, get some sort of a bounce, retest a Stuber fib setup on a very large time frame that would likely take months to play out, and then nuke to new lows from there. That's absolutely a possibility. Just like if we want to go with the regular chart, what would that look like? Basically something like this. And yeah, I think that's less likely because in this case, we have that trend line that would get in our way quicker unless we end up trading sideways for months and months and then eventually pump to the upside. And I mean, anything's possible, right? If we've learned anything from that big liquidation day that we had back a month or so ago, we should understand that anything is possible, right? Absolutely anything. It doesn't matter, when you're looking at trade setups, when you're looking at positions, anything like that, always consider what's the worst case scenario right now. So yeah, as it stands, the trend looks like shit, to put it quite blunt. But yeah, I want to bring up some other indicators. Let's bring up the Trend Master indicator, because I've been warning about this one since about 110K when we were up here, basically, is that, and like I said, this is one of my favorite strategies, using the MDX Trend Master. It's not so much, I know a lot of people want to use indicators and, hey, there's a buy signal, buy. Hey, there's a sell signal, sell. That's not how I use it. I use it for, both entries and risk management, taking profits, all those sorts of things. But rather than using individual signals, I like to see which way they're trending. And this was a big warning for me that we got a lower buy signal. And even more importantly, after that, a lower sell signal. That was a very big warning sign to me that this trend could continue to the downside. And ever since that, retesting it at around 110K, we have been respecting the shit out of that. Even when we get above it very briefly, it's not like we're getting any buy signals there. We're just losing it again and flipping it into resistance. And yeah, currently we basically have the same thing, right? If we basically this last little push that we got, let's just remove that guy and look at the fib that I had pulled yesterday. And just notice that invalidation was kind of right around that MDX Trendmaster resistance as well. So that was just a little bit of bearish confluence there that, yeah, if we push higher, we have again, using that indicator as confluence at this point. First, I'm looking at this market structure, but to have that confluence that, hey, the indicator resistance is right around my 4-hour naked chart structure resistance level, right? So that's very strong indication to me that even if we get some sort of a bounce, we have very strong resistance starting again at around 91.6 thousand and basically run into about 94.3 thousand. If we can break 94.3, I'll at least give credit where credit is due, and we could be, breaking that downtrend. There's at least something. There's at least one potential bullish sign in the market at that point, which right now we don't have. And guys, this is where I was talking about that, hopefully this isn't you guys. Hopefully you don't get triggered by this or whatever, but just seeing across all social media platforms, so many people are so concerned right now with catching some sort of a reversal, saying that, oh, eventually we're going to get a scam pump. Oh, we're going to get a fake out before we continue down. If that's the case, in my opinion, don't be looking to catch that fake out. Don't be looking to catch something because you feel like it should happen. If anything, if we do get that scam pump, as a lot of people would call it, wait for that resistance to end up playing the trend again. Yeah, it's possible it doesn't play out. I actually lost a short back in this level here. Don't get me wrong, I've played beautiful, and that's just because I was playing the trend, right? If once the trend ended up breaking like that, yeah, it happens. All traders lose trades sometimes, but it's very controlled, right? Rather than shorting FOMO into a breakout, I at least waited until the resistance retest, took a very small loss, and then, continuing the trend and getting into some new shorts and crushing the trend again. Because I am just not willing to get bullish at this point, because nothing is bullish on the chart. 4-hour and up, honestly, nothing is bullish to me. If anything, like I said, maybe this weekly bounce level, but that's it. I treat this as a bounce level at best. And don't get me wrong, if we get some sort of a bounce here and bounce back up to 100,000, let's say, which would, just be one of the targets basically. Actually, let me redraw this fib here. Even though it's not technically the strongest kind of Stuber fib setup that I would like to see, at least it is a Fibonacci range type of setup. If we get some sort of a bounce to our first target at around 100,000 US dollars, you are going to see everybody celebrating that, hey, yeah, bears got wrecked, we are going to new all-time highs and all that sort of stuff, and pretend they never took like 30 longs on the way down trying to catch that bottom for a nice screenshot, right? So at this point, any sort of bounce, I think it's going to be short-lived. And as we get to resistance levels, we're going to see retail longs step in heavily again. I mean, let's just look at this, you guys. Let's look at the daily retail long-short indicator here. And although here's one thing to consider, is that I know a lot of people look at it as, oh my God, retail is 80% long. That means it has to be bearish. It also means that it could be getting near a top, right? If retail starts, eventually retail will give up on their longs. And when they start shorting way too late in this trend, that's when we can get some sort of a bounce. But that being said, just understand what kind of ridiculous FOMO this is to see retail sitting at a 80.35% long. Let's look at any other times before that we have hit that 80 retail long level. It's sure been a minute. It has been a long time. When is the last time that we ended up getting above 80 on this indicator? Oh, I have this mapped out here. And notice what kind of price action we had the last couple times that this indicator got above 80. It was literally at our macro peaks. Even this one, it went down a little bit. Kind of actually looks very similar to what we have right now, honestly, is that we lost some structure and then just kind of trading sideways a little bit. But just understand that the few times this indicator has broken above 80, it has been very, very macro resistance rejection type of price action from there. So something to consider there, you guys, that, yeah, if retail starts building shorts, I think it's possible we climb. But until retail is not willing to get wrecked anymore, and they think that they are going to play it safe by starting to short way too late, that's when they're going to get wrecked again the other way. But that is when the price can start to recover. So at this point, it's ridiculous how heavily long retail is right now. So looking at the 1 hour chart as well, guys, notice what happens yesterday, for example. Was this yesterday? Yeah, overnight, I believe it was. So basically what we saw here is we ended up trading sideways in a bit of a range. And as soon as, notice what happens, as soon as retail started building those long positions again, basically over here somewhere, as soon as that started curling back to the upside, that's where we started just absolutely nuking off a cliff. So as soon as retail starts building those long positions and FOMOing in, so notice where that happened, right? Notice where we start curling to the upside here. It's after we already found support, right? Like they were basically, as we got into support here, look what happened. They started building shorts. Shorts started climbing to the upside, and that's what gave us this little relief rally overnight. And then as soon as they started building longs again, absolutely wrecked. So unfortunately, that's how she goes. So yeah, as I was saying, guys, I know this was very, very microstructure, but just look how well it was respected, right? As soon as we ended up losing that very micro uptrend, and let's even go back to, let's just say even starting here, right? This was our low, this was our high. We set a higher high, lowest point between the two is here, never broken. Higher high, higher low, higher high, higher low, higher high, higher low, broken, and like I showed earlier, a little fib pull. Let me just clean up some of these scribbles here to show you. I know most of you guys already saw this, but for those of you guys who were not here with me right at the start, That very basic market structure. Notice how we see those Stubers in all shapes and sizes. We get that structure break, pull a fib from the highs, we come back to that fib pocket, get rejected, right? And that's what we've just been continuously seeing on the 4-hour chart. We set a lower low, we bounce, retail starts longing into resistance, influencers start celebrating that the bears are getting wrecked and that we're going to new all-time highs, and we get rejected at a lower high. We're right where the price is supposed to. And then everybody cries that, you know, there is manipulation in the charts. Guys, understand this. If this is manipulation, this is the cleanest and most healthy manipulation I have ever seen in my life. This, in my opinion, is just market makers doing their thing. And if they are using retail emotions and retail long liquidity to push this to the downside, that's exactly what makes trading easier, if anything. Those market makers that are controlling the price, that's why technical analysis works, is because you're noticing what the trend makers and the market makers are actually doing, right? So to scream manipulation because you know, keep FOMOing into tops or FOMOing short into bottoms, that's very natural. But understand, that's, I guess in some sense it is manipulation if it's market makers holding certain prices, but that's not new, and that's not Bitcoin only. Just because Bitcoin's going down and you think it should go higher, understand that it goes down. Bitcoin goes through cycles. Bitcoin goes up and it goes down. And there's just no, if this is manipulation, then the stock market in general, as since the beginning of time with market makers and, you know, buy and sell levels, it's been manipulation forever on all assets in that case. So this is no different, and we need to stop making excuses, because I have been, and a lot of us in here have been all over this trend. As long as you're looking at very basic market structure, keeping it simple, because a lot of people overcomplicate things, right? Like I was saying earlier, reaching out for indicators to, you know, back up theories that, you know, to back up their gut feelings kind of a thing, rather than actually just looking at very basic price action for what it is, right? So I hope you guys are all, you know, weathering the storm. I hope you guys are all crushing it, for one. At the very least, I hope you are not getting absolutely wrecked on this trend, because again, as long as you can set those emotions aside and not listen to the, you know, the influencers that have 1 million subscribers, understand they never got 1 million subscribers because they're good traders. They got 1 million subscribers because they said what people wanted to hear. There's a very big difference between traders and influencers. Traders look at charts and they play the lines. Influencers tell you that we are going higher every single day, likely multiple times every few hours. There's a huge difference there. So let me know in the chat how you guys are doing. I hope you guys are all doing fantastic. Altcoins as well, not looking great in my opinion. I still have more faith in altcoins than Bitcoin, just because of the phase of the cycle we're in. But yeah, like Ethereum, we couldn't even get back up to my Stuber fib here. So actually, here's a nice example, a live example, that Ethereum also, right? We had this low, we have a lower low. That means we have a confirmed lower high at approximately 3,066 US dollars, somewhere in there. Basically need to break above 3150 for any hopes for the bulls. But yeah, Ethereum, if it sees some sort of a bounce, I mean, we just have resistance basically starting at about 3,000 and going up to about 3150. Not looking great, still has a nasty downtrend there. Solana actually did break its lower high finally. However, it never did break the 115. Oh, I see. I just had a request for Sol. Here you go, James. Yeah, we did actually break the lower high. However, we never invalidated the swing fail level. So I have mixed feelings about this one, honestly. It's the fact that it did get above into the swing fail means that it did technically break that lower high. So if we wanted to look at structure, I mean, technically we're bouncing from, but that may have played out already, right? We got the bounce from the 786, 886 Stuber fib pocket here, hit the 0.5 fib and seen weakness already. So it's really hard to say how that's going to go from here. I assume it depends what Bitcoin does. I just don't have a lot of faith in too much right now. ASTER is one I feel a little bit different about. You guys know that I've been in a beautiful ASTER position for several weeks now. Absolutely nailed the perfect bottom. I am hoping that that ends up holding. But even as Bitcoin's been trading to the downside the last month or two, this one's been performing quite well. Basically, we hit my swing fail target there, hit my diagonal support line. Oops, excuse me. Ooh. Oh, cheeseburger getting me. This downward sloping support line lining up with my swing fail target there, or my swing fail pocket, and getting that perfect bounce there. So at this point, also the fact that this would have been basically our high at the time, right? Because if this was our low, this was our lower low where I ended up getting in. So that's one of those times as well, guys, right? Even though we broke downward, that's where most retail traders, most traders in general, would be looking to short, because they say, hey, we broke support, it's time to short. If anything, it's time to wait for a pullback and look for short opportunities, but I just took the long there as the swing fail, and riding it ever since. And the fact that we did end up breaking this level, now we have a nice potential uptrend. I mean, that position yesterday, I haven't even looked at it today, it's on a different account, but yesterday I was sitting at around 750% profit or something like that. It's a 20x from down here. But at this point, still looking good, right? Let's bring up the Trendmaster indicator. We are currently losing that pink line, but we are still holding the other line of this indicator. So basically, as long as it stays above, I'm going to say stay above $1.12 or so, ASTER's still looking fairly decent to me. Actually, I just noticed something. Let's look for a more exact invalidation, because technically we have this as our high, we have our higher high, we have our confirmed higher low. So let's pull a fib right here. Look at something like this. So basically, if we stay above $1.09, then this trend is still intact. If we start losing that 115 level there at about $1.09, that's where I would start to think that maybe we're going to retest support of this range. I would even consider taking a little more profits off my position if we do that. I'm probably going to set a conditional order to close half my remaining position if we end up dropping that. But so far, not looking so bad. Hoping to see this guy end up holding as support and pushing us to the upside. I'm really tempted to take another long on it, to be honest. Troll's an interesting one. Very, very high risk. It is a low market cap meme coin. Unfortunately, looking like a bit of a fake out here, but I do like that we at least broke some sort of a lower high on the daily chart. Let's look at the 4 hour, and we actually did get closes above that level. So I would really hope that this fib ends up holding. Basically, I basically don't want this to drop below 3 cents. We'd be losing some serious structure there. We're going to have to see what happens with that. That's basically my meme coin of choice. I've been throwing some of my Bitcoin shorting profits into a DCA position on this guy. But I understand that it's very high risk, and it's I'm not married to it by any means. Yeah, I'm going to keep buying it. Even if we go into a full bear market and this thing nukes 99%, I'm going to be accumulating it because it's the only meme coin that makes sense to me, basically. I got to catch up on the chat. I've been ranting way too long here and got to catch up. First of all, thank you all for being here with me once again, my friends. I hope you're all having a fantastic day. Like I said, I hope you're absolutely crushing it. Nice to see some OGs in here. Stock Poker, nice to see you in here. And obviously all you guys. Cause, good to see you in here again. Getting a day to yourself here to come say hi. Hey, Eugenia, good to see you here again. James, fellow Canadian, love to see you. Ghost, you as well. Honestly, well, I'm not going to name you all. Thank you all for being here. Ghost, why don't you ask how I'm doing? Because we know you're doing fantastic. Yeah, Adrian, I love shorting the piss out of this. I feel the same way. There's a special feeling towards making money on the downside. Seeing people, you know, on, let's say, crypto Twitter, for example, just looking for any sorts of hopium, just looking for any explanation rather than looking ahead and being like, how can I, you know, improve my trading and improve my technical analysis skills? People would rather look back and say, hey, why did this happen? They don't have an interest. Like, the thing is, Adrian, I know you're much like me, you were warning people at about 125,000 US dollars that, you know, it's very possible we get rejected with that swing fail. And, you know, we're ready for those types of moves. Whereas, you know, people didn't want to hear it when we were saying it because the chart looked bullish as we were breaking through all-time highs. But that's the thing. Resistance always looks bullish. Support always looks bearish until it holds, right? So people would rather basically wait until it's too late and then look for reasoning and try and convince themselves that it's, you know, not their own fault. Whereas the game of trading, one of the main reasons I love this game is because I literally have nobody to blame but myself. If things go against me, it's very much, I shouldn't say it's in my control, but how I position myself is 100% in my own control. And that's where, with reading charts, you know, if you're trying to look into fundamentals, you're trying to look into meetings and announcements and tweets and all that sort of stuff. Like, if that's, you know, so many people do that and then, you know, blame those things when things go against their trade ideas. But understand, in the game of trading, I mean, guys, so many of us, myself included, know so many good, even fantastic traders out there, including many in this group. And even like those of you guys who I respect very much and respect your opinions about the charts, I would simply never take one of your trades based on you just simply saying it. That doesn't matter if it's MDX himself, if it's, you know, Will, if it's like Adrian, Jack, you know, myself. You should always, like, even the things that I'm saying, even though I'm crushing this trend, you should only be listening to my setups or my ideas if you agree with the analysis, right? At the end of the day, it's totally up to you how you plan on trading. But yeah, moral of the story is I will never blindly take someone else's signal unless I agree with it, because at the end of the day, it's my fault if I end up losing money. Miss the long wait for the next bull run. Yeah, that might be. Or altcoins, right? Altcoins still may have their moment of the sun. It's a long shot. I'm not saying an alt season is guaranteed, but I will give credit where credit is due, and it is possible that altcoins have a run to end the cycle like we typically see. That being said, altcoins in general have been very different this cycle compared to the previous couple cycles that I've been a part of. It's very different. So maybe we don't get the same thing. If we do, it's definitely going to be different in the sense that previous cycles you could basically buy and hold anything and make money. This cycle is very different. There is literally tens of millions of different coins out there. The whole Solana casino basically devastated the altcoin market because people just started creating trash. Every second or two, there's new coins launching. And that's not an exaggeration. You can go on some platforms like BullX and just some of those decentralized altcoin exchanges, and you can literally watch that every second or every 2 seconds there's a new coin launching. It's absolutely ridiculous. And unfortunately, there's not enough money in the market to send, 30 some million coins to the moon. There just isn't, unfortunately. So you actually have to pick winners this cycle. So unfortunately, it's a little harder, but it's still possible, right? I mean, look what Zcash has done recently. It's gone absolutely parabolic. It's gone on an absolute moon mission against everything. I'm actually going to bring it up. So not to say it's impossible, right? Things can still run. That being said, guys, Zcash currently at a bit of resistance. I already played the short out of this level once, so I'm not really interested in playing this Stuber again. But again, very basic market structure, right? Basically, this would have been our high. This was our higher high. We ended up losing it. If you don't like that, we just lost that wick. Okay, well, we lost everything there. So let's pull a fib. Let's look at what happened here. Pull a fib to the bottom there and notice where we end up getting our rejection there. was right in my purple pocket, the 786, 886 fib pocket. That's currently where we're struggling with right now. It's very possible we see another rejection here. I'm just less interested in playing it because it's already played out once. The fact that we tested this fib pocket so well and then came back to the first target, only the first target, we never did hit the second one, but it did technically play out once. So at this point, I have less faith in it because typically if you test resistance over and over, it's going to break eventually. But this is one of those times where I would be more interested in looking for shorts if we get some sort of a swing fail of my red pocket up there. We'll see. At this point, just Bitcoin's been in such an easy to play downtrend that I'm really not desperate to have to catch a short on Zcash right now. Although don't get me wrong, it could be a beautiful reversal. It's just very risky because no matter how I feel about it, even though there is technically this bearish setup here, this thing has been on an absolute mission, and that's a very scary train to stand in front of, basically. And the fact that Bitcoin has been so predictable and so healthy moving, as long as you're okay with a downtrend, I've been mostly focusing on Bitcoin. But yeah, if we can get, a lot closer to my invalidation levels, basically above my 115, if we can get up into this level, then I'd consider laddering into a short. Just because at that point I want to keep my risk management tight. I could still take a loss, right? If I end up laddering into something like this, for example, I could still very likely take a loss, but at least it's a controlled one, and I'm keeping risk management tight on something like that. Yeah, Ghost. Love your stream, Stu, from BTC and Ethereum to troll. Nothing in the middle. Yeah, pretty much, right? I'll look at anything crypto related. I'm not a Bitcoin maxi. Well, fundamentally, I think that Bitcoin is the only thing I'm actually truly bullish on fundamentally. Everything else I feel like can be done with Bitcoin. But yeah, I'll still look at anything and trade anything, right? I'll still hold altcoins. I'll hold meme coins. I will trade altcoins, whatever. I don't care. Because at the end of the day, I mean, when I first got into crypto, you guys, I didn't give a shit about the fundamentals. I liked the idea of Bitcoin, but I more so liked the idea of the volatility with Bitcoin and how easy it was to get into leverage, and how I didn't start with leverage. I started with spot trading until I had a good grasp of it. But just the possibilities with crypto and the 24/7 trading, and like I said, the volatility, that's what drew me into crypto trading. It was after using it and after working with people globally and sending payments and receiving payments and that sort of thing, and just getting dicked around by the banks and stuff, and then just using Bitcoin instead. That was kind of the moment where it was like, oh, I actually believe in this now. But before that, it was all about the volatility. And still, the main thing for me is the volatility. Nailing it, Stu's cool. Oh, that's the nicest thing anyone's ever said to me. Thanks, cause. Super JK. Holy. Chat's active today. We have a good crew of people here today, guys. Love to see you guys here. Thanks for joining. This is exciting. Haven't had this big of a group in a while. But I guess, you guys, the market has been insanely volatile. So, yeah, some people are excited. Some people are terrified. Some people are crushing it. Some are getting wrecked. That's just the game of trading. But those of us who have been around for more than one cycle understand that anything is possible. And that's why I say that, dropping down to somewhere like 40,000 or 50,000, although I'm not saying it's probable, it's at least possible. Because I have had my ass whooped by the market in my earlier years enough times, especially in let's say my first year of trading. Every day I was waking up and checking headlines, checking the news, checking why XRP and Tron and all these fucking shit coins were not pumping. Why were they going to the downside? I used to be that guy. And then I started looking at chart structure. I started... and I always was, but I started focusing only on chart structure. I started ignoring announcements. I stopped reading headlines. I stopped Honestly, stopped watching other YouTubers. I just straight up did back testing with this replay feature here and figured out what my probabilities are of my trade setups, basically. Make a set of rules and go back, use the replay feature, do several years of back testing so you get all sorts of market conditions, get a big basket of examples of your trade setup. If you don't have your entries lined up, your take profits lined up, and your invalidations lined up, if you don't have those three things, you do not have a valid setup. Those are all things that you should have a list of rules written down and back tested. Most traders would way rather lose $10,000 trading poorly than they would just doing 10 hours of back testing, 10 hours of homework, whatever. A lot of people would rather just get wrecked than put in that effort. But unfortunately, you guys, trading isn't easy. A lot of people get into it thinking that I want an easy run, I want easy money, I'm just going to become a professional trader. Understand how much harder it is to get a grasp of your emotions and how much harder it is to do something like this than a typical job, basically. It is one of the hardest things you can do just because of the emotions involved. But when you really get a good grasp of it, it's a lot of fun. When you exit survival mode and you just have systematic trade setups and you can ignore the noise, it gets a lot less stressful at that point. I'm no longer stressed out about the market. I don't give a shit if it's going up or down. I just care that, hey, when my trade setup shows up, I'm going to take this trade. Win or lose, I'm taking it. That's basically end of the story. The room is full because I'm the Papa Bear. That's true. I am quite often the first one to get a little bit bearish. And you guys, that brings me back to why I microanalyze, right? Look how well that got respected, right? That very, very micro higher low that broke there. Look how quick that reversed there. That's why I catch these moves early. That's why I'm very quick to flip, bearish if something like that happens on, let's say, a 4-hour chart or even a weekly chart. The fact that I look at this and can microanalyze and have such a good understanding of higher highs and higher lows, lower highs, etc., it makes me be able to adjust my bias very quickly. We're at the 886 on the 5-minute. Possible. I'm not overly interested in playing it myself, but yeah, we could get a bounce. No, we are not at the 886. Let me just remove all my drawings and pull my fib. This is where the swing started. And no, we're not even at the 786 yet. But that goes to show as well. Remember that structure I was talking about on the weekly chart and how I said that the reason why I don't consider this a valid Stuber is because this isn't actually the start. I mean, yeah, it's the start of this little swing, but when I lose that micro structure, I start to look for where did the swing start? Well, the swing started way down. This swing on a macro time frame started at the market cycle low. So very much like what happened here on the 5-minute, I would not be pulling a fib from here or here or here or here because we lost the micro uptrend. Where did this swing begin? It began down here. So that's where my fib is pulled from. So that's where earlier I was saying that a lot of people were, calling this a Stuber fib, for example. A lot of people throwing that title in there, but it's not necessarily true, right? It doesn't necessarily fit my idea of a Stuber fib. And don't get me wrong, it can absolutely bounce here. Like I said, it's potential support. There's no argument about that. It's just that if I was looking for structure, I'd like to, once we lose the micro trend, I look for where the swing began. And on a macro scale, we lost the micro trend. So the macro pull, where the swing began on the macro time frames, that's how I have it pulled. So similar to the 5-minute right now. So I think we can go lower yet. Again, I think it's quite likely that we see a bounce out of these levels, but I wouldn't be surprised if it does something like that, or even something like up to our targets basically and then down. Wouldn't be surprised, but we'll see. Anything is possible, right? Like the 4-hour chart, we could absolutely get a decent little bounce here. I'm more interested in shorting the rip rather than longing the dip, but basically something like that. As I mentioned, around 91.6 thousand is kind of where that resistance starts again, running all the way up to about, I'm going to call it 94.3 thousand, 94.2, 94.3, somewhere in there. Watching a crypto video with no sound is actually not so bad. Maybe it's even better. Maybe you don't want to hear what I have to say. Nice. Even more people here now. Holy smokes, you guys. What else? What else? Looking at the RSI. So that's another thing, right? So actually, I want to show a bullish setup. This is definitely Captain Hindsight, all right? It is not something that I intended on playing, but just something I can see very easily just from a quick glance here. Is, you know, this technically would have been a little stuber, right? Technically, we had this... actually, sorry, let me start that over. We had this as a low, went a little bit lower, broke that lower high there, end up getting not a stuber fib pull, but we got right down to my invalidation, basically hitting the 115 almost perfectly. But on top of that, getting this RSI divergence from way oversold conditions up to that regular territory, basically, right? That's a very specific divergence I like looking for. So the fact that that came in while we were still at my support levels, you know, very natural that we saw some sort of a bounce there. I saw that. I had no intentions of playing it. I didn't really care to miss this because I'm so much more short heavy and more interested in shorting every rip that I can. But that setup was there, right? At least it was something valid. But just notice how quickly the price went back into overbought conditions, basically got right up to that overbought level at about 70 on the RSI and then reversed from there. So just another little bit of confluence with this little structure we had here. Now, understand that this being overbought doesn't necessarily always mean being overbought. If you get over that 70 level, that can just mean that there's a shit ton of buying strength in the market. However, in a downtrend, I consider anything around 70 or higher to be overbought. Whereas if we go below 30, I don't necessarily consider it oversold just because we're in such a strong downtrend. So the RSI is the relative strength index, right? So if the strength is down here, that's a lot of strength for the bears as long as we're in a downtrend. If we were in an aggressive uptrend and we hit these levels, then I would consider it being oversold and it's time to get back in, kind of a thing. So it really depends on market conditions. Did we hit that 786 yet? Yeah, absolutely perfect 786 touch there. So far so good there. If you're looking at scalping the long side, I myself, I'm not, but hey, the setup is there. What else? What else? And guys, those of you, we have a great audience today. And you guys, if you do like, sorry if I am offending anybody by making the structure sound so easy. I understand that if you're newer to trading or you haven't been through more than one cycle, how overwhelming this can all be. But if you do like the way that I keep everything very basic market structure and Fibonacci pulls, if you like the way I stream, you know, every Thursday evening I do these live streams for an hour and a half, whatever. But on my other YouTube channel, the crypto trading channel, I do basically daily updates. These are usually about 20-25 minute updates. Even did one right before doing this stream, a quick 15-minute one or something like that. But yeah, do yourselves a favor if you do like the way that I explain things, how I look at market structure, how I pull fibs, how I use some of the MDX indicators, all that sort of stuff. I'm pretty much giving daily updates on this YouTube channel. So do yourselves a favor, get subscribed into that. We have been all over this trend basically ever since setting our highs basically at 125k. I actually shorted live on one of these streams from about 125.2k, and ever since have been bearish because the structure just has not changed since that. So yeah, likely to see a little bit of a bounce here. Wouldn't be too surprised to see us hit this 0.5 fib, maybe even hit this 0.214 fib. That would be the second target. And who knows, maybe we start a little uptrend, right? The fact that we had this basically these straight shots of downside price action, if we can take out some of those resistance levels, like if we can take out this resistance level, it's basically a straight shot back up until we have any more structure, right? So if we can break out of this range, yeah, it's possible that we get a sharp recovery. It's just that I don't necessarily think it means we're going to all-time highs. It would just mean that we are seeing some sort of a relief rally, right? But as I mentioned, I am mostly concerned about the 4 hour. The 4 hour chart is deciding which direction I'm trading, basically. So even if we see that bounce, like I was saying, at the end of the day, we have a low, we have a lower low, we have a confirmed lower high around 93.2k. Anything below that, and even with a little wiggle room closer to 94.2k, anything below that is just, we're still in a downtrend. That's all there is to it. I know not everyone wants to hear that, but the market doesn't give a shit about our opinions or our feelings. And the trend is to the downside, and the trend is your friend until the end. So I don't really want to fight this. Anyways, guys, I think that's about all I wanted to go over today. Just trying to be the voice of reason out there. I know there's so much information to go through, and there's so many influencers promising so many ridiculous frickin' price targets out there. It's hard to keep a level head, so I aim to be that voice of reason and just look at charts for what they are. I don't care about fundamentals. I don't care about announcements. I don't care about tweets. I just want to look at market structure, and that's exactly what I'm looking at on my YouTube channel pretty much every day at this point. So if that is something that interests you, subscribe there. But other than that, my friends, I think that's about all I wanted to go over. So thank you once again for being here with me, my friends. With that, I'm out. Stay safe, my friends. Peace.